The 4-hour chart tells you everything you need to know, daily bias, liquidity, and in this video I'm going to show you how you can use the 4-hour chart to become a consistently profitable trader. And the first thing you want to do when you're on the 4-hour chart for whatever asset you want to trade is you want to look for the most obvious liquidity pool that price is going to go for. Now what makes the 4-hour chart so powerful and so great is this is what smart money are executing on, right? They do their analysis on the weekly and daily chart, but they are looking to execute. And by execute, I mean enter their trades on the 4-hour chart. So every single candlestick here tells a story in the 4-hour chart. This isn't the 1-minute chart. This is the 4-hour chart, right? So this is probably the most important chart in all of trading. And like I said, it tells you everything you need to know. So what you want to do is when you're on the 4-hour chart is you want to ask yourself, where's the most obvious high or low that price is going to go for? Now, hopefully it's pretty obvious at this point right here. This is the next most major high that price is going to go for, right? Price is right next to it, right next to this high. It's almost magnetized towards this high. I'll tell you why in a minute. And it's very unlikely that price is going to come all the way down and take out this low. Now, would you agree at this high right here, there would be lots of stop loss orders? There will be lots of people who trade support and resistance who will think that price will come up here to this level right here and then bounce off and reverse. Would you agree that, let's remove this, would you agree at this level there's probably lots of stop loss orders? Right, hopefully so, right? At this level there's going to be lots of stop loss orders on the 4-hour chart, right? Not on the 5-minute chart, the 4-hour chart, right? There's going to be lots of money. Now the only reason these markets move is for money or liquidity or stop loss orders. They're all talking about the same thing. If Goldman Sachs, JP Morgan, smart money, they can only get into and out of their position where there's lots of money, right? If you're buying billions, let's say, if you're smart money and you've bought billions of euro dollar down here, right? And you need to get out of your position, what do you need to do? You need to sell billions of euro dollar to get out of your position. Now, smart money can't just market buy and market sell like me and you do, right? The only way they can get into and out of their positions is where there's lots of stop loss orders or liquidity or money, whatever you want to call it. Now, at this level here, there's lots of money. So does that make sense, right? If smart money bought down here, that the only way they're going to get out of their position, let's imagine they bought down here, right? Is the only way they're going to get out of their position is by targeting this major high where there's lots of stop loss orders and they can get out of that position, right? Does that make sense? Hopefully it does make sense. So what the 4-hour chart is really telling us, and what's so important about it, is it's telling us where the next most obvious liquidity pool is, right? And like I was saying, the only reason these markets move is for liquidity. So this high right here, there's going to be lots of stop loss orders, lots of liquidity. This is going to act as a magnet pulling price towards this high, right? Now, what we do afterwards doesn't really matter. As day traders, scalpers, and even as swing traders, right? If you're a swing trader, you would enter on any sort of retracement, fair value gap, whatever, ride price up, right? So if you want to trade a 4-hour chart, there you go. But most people aren't swing traders. So how do we use this to make money, right? That's the only thing we care about in trading, right? We want to make money. How do we actually make money from this? So what's really important right here is this liquidity pool that we've just talked about. This tells us the direction of the market, right? We now have our daily bias, our liquidity pool, whatever you want to call it. We now have our most likely direction where price is going to go for next, right? So all we need to do is trade in that direction, right? Hope that makes sense. This is why the 4-hour chart is so important, right? It's not the daily chart where there's some, random high all the way over here in price action and it's going to take like a week to get there, right? It's not the weekly chart, it's not the daily chart, it's the 4-hour chart. It's the most recent bit of price action, which is telling us where price is going to go for next. And price is going to go for this high here. And what we do afterwards, we don't care, right? We can make money riding price towards this high. So let's get down onto the lower time frames and look for a simple entry that we can use. Okay, so here we are on the 1-minute chart, and you would do this analysis that I'm about to tell you on any time frame that you like to enter your trade on, right? So here we are on the 1-minute chart. Now, do you know how I said that we look for an entry? There's actually a middle step that so many traders don't even realize, and this is what held me back for years, right? You have your bias, then you need to look for a sweep, and then and only then do you look for your entry. I'm telling you, if there ever was a holy grail in trading, that would be it. Bias, sweep, entry. Super important, right? So the 4-hour chart, liquidity pool, which is all the way over here, right? That tells us the bias, but we're not going to enter our trade and start, targeting this random high, right? We need to look at the entry time frame, right? So we're looking at the 1-minute chart. The only thing we need to look for is a stop run, because these markets do not move in straight lines. And do you know how I was saying these markets only move for liquidity or money or whatever you want to call it? The exact same thing on the 4-hour chart happens on the 1-minute chart, and on all time frames, right? These markets are highly manipulated, and they're only designed to allow those with billions, i.e. smart money, to make money. It's not designed for me and you, but we can make money by essentially copying what smart money does, right? But has this happened to you before? And it probably has happened to you. Let's just say there's an order block right here, right? You're bullish, you've got the liquidity right, you've done the analysis, your daily bias is correct, and price comes off, and then you look to buy on some fair value gap or order block, only to see price what? Chop for a bit, and then take out your stop loss, and then go straight to take profit. Like, has that happened to you before? Probably, and this used to happen to me for years and years of just pain and frustration. And to be honest, those were some of the most miserable years of my life. I wanted to skip that, and the reason why I kept losing the trades despite having, the right liquidity all the way over here, the right daily bias, was because I didn't wait for a sweep, right? Now, a sweep is simply, or a liquidity sweep is simply a stop run. It's a fake move designed to take out stop loss orders, so smart money can get into their position and then price shoots off. And before every big move, and this is something for your notes, for every big move, there will always be a stop run, right? Designed to allow smart money to get into their positions. And on a lower time frame, for those who are wondering, it's their algorithms that are trading like this. So, can you see this low here? Let me move this out of the way. Oops, move this out of the way. So this right here is time. And it's always New York Eastern time, for those who are asking. This is Eastern time. I live in the UK, but I still use Eastern time, right? So for those who are wondering, this is EST, right? So this right here is Asia's low. Now, it doesn't really matter that it's Asia's low. Any major low will do. Now, there's going to be stop loss orders here, right? Pretty easy to imagine. There are going to be people who have bought here and put their stop loss at this low right here, right? Not that much liquidity compared to the 4-hour chart, but there's still going to be some money at this low, right? Someone's going to have their stop loss here, right? Now, can you see, and this is really important, right? Can you see this long wick? Look at this long wick here. Can you see how it goes below this light blue line, or this dark blue line, which is where all the liquidity is at this low? It goes just below it, and it instantly shoots off in the opposite direction, right? So let's just let's zoom out a bit and make this crystal clear, right? Can you see how price does this? There's the low. Here's the major low right here. Price comes, this little wick, look at this little wick just goes below it and then shoots right off in the opposite direction. That right there, you will see over and over and over again. If you've watched a few of my videos on my channel, you'll know this is essentially the same thing I say constantly, not because I'm crazy or insane, but because this is actually what works, right? This is how I actually trade on a day-to-day basis. Look, bias, sweep, entry, right? Keep saying that until it's in your mind. But, would you agree that this wick going below this low here and then shooting off, would you agree that that's a fake move? Right, probably. Like, it probably makes sense. This is a fake move. The wick just goes below it and it shoots off in the opposite direction. Now, you might be asking, oh, Atif, what happened here? Like, was this a sweep? Was this a sweep? Well, let's see, right? Can you see how price chops for ages, right? Chops. We do not want to see that. We want to see strong, aggressive moves in the opposite direction. Now, some traders want to wait for a market structure shift. I don't use market structure. Like I said, the only reason these markets move is for liquidity or money, right? It is not because of, a body closing above an old high or whatever. But, if that works for you, that works for you. But we've got our two, complements. We've got our bias on the 4-hour chart, which is the liquidity pool, all the way up here. And we've got our sweep, right? That right there is 99% of trading done, right? You're 99% of the way there. All you need is a simple entry pattern. Now, I think after years of trading, a few 5 years of trading, more than that at this point, the easiest thing to do is once you've got your bias, once you've got your sweep, is just to wait for a fair value gap to form in the opposite direction. That right there is the easiest way to know that it's a sweep, right? We've got major liquidity at Asia's low, major liquidity pool. It's not some random low, and it's a fairly significant low. Price wicks below it, it shoots off, it leaves a fair value gap. The fair value gap is smart money screaming at you that this is their entry. And the reality is, this fair value gap, the only reason this is actually here in price action is to allow smart money traders and their algorithms to get into the position, right? It's almost like I always say, right? Smart money screaming at you. They're not screaming at you, they're screaming at other traders who trade like smart money, right? They're saying, hey, get in. Now's the time to get in. So that's how we enter our trade, is at a fair value gap. Now, if you like your indicator or order block, by all means do that. But waiting for a fair value gap is the easiest way to get confirmation. So what we're going to do is simply enter on the fair value gap. We're always going to put our stop at the low because there's no point waiting for a sweep if you don't have the stop at the low. There's absolutely no point, because what was the point in doing this analysis if we're going to put our stop all the way here, right? I know you get away with it this time, but what is the point, right? The whole reason we wait for a liquidity sweep is so we know it's very, very, very unlikely that price is going to come and reverse and take out our stop loss. Why? Because it's already done that, right? The only reason price came down here was to take out this major liquidity pool and shoot off. Very unlikely that it's going to come all the way down and take out your stop loss again, right? Very, very, very unlikely. So hope that makes sense. And for your take profit, so your stop is always fixed at the low. For your take profit, you're going to target, if you're on the 1 minute chart, I always say this, you should just target a higher risk reward as you can realistically get. My eyes instantly gravitate towards this liquidity pool. You know, minimum, if you're trading the 1 minute chart, minimum a free risk reward ratio. I always, for those who are wondering, fixed free risk reward ratio. That's what works for me. Take profit is the easy part, right? Listen, if you're making money, how much money do you want to make? That's the easy part, right? Everyone loves money, don't we? So for your take profit, you want to target something that's actually realistic on the day, right? So don't just target blindly the 4 hour chart. Unless price is right next to it, then yeah, by all means target it. So this is easy liquidity pool right here. And if you just do this, if you just follow this 3-step process, buyers, sweep, entry, you'll make all the money in the world. And if you combine that, or if you watch this 7-minute trading psychology video and you follow this process, you will become a profitable trader instantly.